237 is the print, 241 the estimate, 245 the previous number. It's a drop of 8,000. It comes in at 237,000 for initial jobless claims, pointing towards what Janet Yellen, I'm sure, would say is a very tight labour market. If you look at the fully fed business outlook, that jumps higher to 27.6 relative to the median estimate. It drops from the previous number, though, at 38.8. So it's a drop on the fully fed, but an upside surprise against the estimate. So initial jobless claims 237, David, and a quick look at import prices. The import price index month on month comes in at negative 0.3%. The estimate negative 0.1.
So those are your numbers. Let's help us sort it all out now. We're going to bring in Frances Donald. She is senior economist for Manulife Asset Management, and Mazen Issa is senior FX strategist at TD Securities. Still with us is Jim Caron of Morgan Stanley. So let's start with you, Frances. As we sort through, you're an economist. So as you sort through all these, what do you pay attention to? What jumps out at you from this that tells you something about the economy?
You know what? There's no question that those jobs numbers continue to look good, and we're seeing a nice rebound in manufacturing. That's good news. But the number I care about most here is that import price number year over year, and that's because it factors directly into the Federal Reserve's inflation model. This is how we see the impacts of oil and the U.S. dollar filter through to the economy. Now, we've only seen 6 consecutive months of positive import prices. The problem is it looks like they peaked out in February. So this is actually a disinflationary force, and it's a data point that doesn't get a lot of attention.
So if this figures directly into the numbers that the Fed's looking at, what does this tell us about what Janet Yellen had to say yesterday about looking through those soft inflation numbers?
Well, Janet Yellen tried to be pretty dismissive yesterday about the weakness that we've seen in inflation. They're just calling for 1.7% core PCE this year. The problem is that if you look out historically, it's been since 2012 that we've seen a 2% inflation target. We haven't seen inflation above 2.5% since 1993, and we haven't seen, or the average of the past 2 decades has only been 1.7%. So when I look at this big picture, I have a lot of trouble believing that we're getting back to 2% by 2018, 2019.